Pradip P Shah, Chairman, IndAsia Fund Advisors as well, is joining us right now on the show to talk about his market view. Pradip, hi, afternoon, or rather morning actually.
Hi.
What's the sense that you're getting about the market? Because whoever we're speaking to is talking about as to how the market is pricing in a Modi-led rally. What if a majority at the top doesn't come through? How disturbing would that be for the market mood then?
Well, if a Modi government comes in, but without the kind of mandate that he has in Gujarat, there will be a compromise. He cannot be the Modi of Gujarat if he does not have the same kind of mandate. And so there will be certain compromises made by him to accommodate his supporters. But on the other hand, he will show the vision and the leadership. And I think there is a lot of grounds for optimism that a change in government can lead to a better outlook for the country in terms of growth with justice. And I think that is what the market is banking on just now.
So at 6,700 on the Nifty, to your mind, what exactly are markets pricing in? Do you think markets are already pricing in a Modi victory, stable macro, and uptick in earnings?
Well, I think the market is pricing in a more stable government, a more decisive government, better leadership and better vision. And so, for instance, we see currently in the last 5-7 years, we've seen great success in terms of growth. We've seen great despondency as in the middle of last year. We've seen in the judicial system great pronouncements, and on the other hand, we have got disappointments from time to time. The law and order situation in some states, wonderful, in some states, not so great. And so on. The framework for infrastructure investments, we have seen regulatory overreach, we have seen some very stable and fair regulatory environment. Now, if a leadership with decisiveness and vision comes in, I think we will see a lot of these issues addressed purely because the government and the leadership believes that fairness and justice and investment to take place and all is the right thing to do. For instance, just having the central government work in harmony with the Reserve Bank of India. We've seen in the last few years the central government going for growth, ignoring the fiscal deficit. It's been large. Chidambaram sought to control it up to a point, but it was still too large, and we are already seeing it's exceeded it in February. Whereas the Reserve Bank felt that it was the only guardian of monetary stability, and so has kept interest rates very high. Now, if both work in sync so that you address inflation by augmenting supply, by better distribution, by controlling the fiscal deficit, then the Reserve Bank is probably enabled to have interest rates come down, which will have a spur which will give a spur to growth. And that is the scenario I think the market is expecting, that there will be synchronization of policies to lead to growth. And as I said, if the leadership gives the direction with justice, and that justice is in terms of human development index and making equality of opportunity, ease of doing business, and a whole array of policies that can dramatically transform this country. This country has huge growth potential. We showed in the past that we achieved 9% growth. Maybe 8% is sustainable, but 5.5% is far below, or 5% is far below our potential. And that, I think, everyone recognizes, and that's what the market is saying, that the new government will help bring in back that vigor in growth.
The central question now is that which way should one lean? Should one go with economy-related stocks, or it's time to revisit exporters?
Well, I think it depends on one's risk appetite, but certainly the economy-related stocks look a good bet. They were beaten down, and there is potential upside if a good government with good leadership and vision comes in, a decisive government with some mandate. You certainly can see the economy improving, and if that would bring all the cyclicals as well as the infrastructure play and banking and so on in a better frame of economy to do business. And so we will see a natural propensity to invest in these kinds of stocks.
Pradeep, let's talk about the importance of rupee. Now, at a time when the general view is that exporters will do well because US economy is bouncing back, IT companies, pharma stocks, they have this inherent competitive advantage. If rupee appreciates further, pharma companies and IT companies could actually report a sharp drop in their quarterly numbers. And I don't think markets are really prepared for that, because most of the analysts who are rating these stocks, they are betting on uptake. Nobody is betting on a sequential drop.
Well, one hopes that the Reserve Bank will be a little more activist on foreign currency management, the pricing. Of course, the stated policy is not to intervene in the markets. But if you remember, in 2011, the rupee dropped to 38 rupees to the dollar or so. It was not called for. That was not a fair value. Now, there should have been intervention to prevent it from falling to that level. And just as when it fell to 69 rupees, it was an excessive move on the other side. Now, like it or not, the Reserve Bank will have to keep an eye on the currency. So we have seen a lot of action on the part of the Reserve Bank of India from mid-2013 when a flurry of action was taken to prevent the slide of the rupee. But in that activity, there was some panic detected by the market, so it sort of continued to respond negatively to the Reserve Bank moves. With this governor, he's brought in a lot of confidence in the market that we will not have this kind of volatility. Yes, no one can predict what kind of inflows in terms of foreign institutional investment or foreign direct investment can come into the country, and that can sway the currency because the market is thin at the end of the day. If you look at it, we have a foreign currency market that is precipitated on actual transactions. We are not allowed to take speculative positions without a transaction that are backing it. That's the law. And so if you have a huge influx of foreign currency at any point of time, the market may not absorb it. You can see the currency going down. That's where the Reserve Bank has to step in and buy the dollars, which it has been doing. And when there is an offtake of dollars for, let's say, oil imports and so on, it is good if the Reserve Bank keeps supplying that money so that the market is not affected. Now, this is where the challenge is, to have a fair, deep market at all points of time. Whenever there is inflow or outflow in larger quantities than the market is used to. And the normal export-import flows the market can handle. But it's when these capital flows come in, that's when the challenge arises in terms of the currency value.
Pradip, a quick word on cement as well, because off late we've seen the entire basket move. Most of these stocks are, making fresh record highs as well. What is it that the market is pricing in? The economy turning around and thereby earnings growth as well coming in, or is this just part of the cyclical trade which is playing out right now?
Well, I think some of the stocks were beaten down in value to $40 and $50 per ton of replacement cost, whereas the actual cost is much higher. So clearly there is some corrective buying taking place. Also, some kind of either concerted action is taking place in the price of cement in certain areas. You've seen the Competition Commission crack down in the past, and so maybe that is holding up price. The fact is that there's a lot of surplus cement capacity, and so it'll take time to get absorbed. But if you have 8%, 9% growth in the economy, or even 7% growth, certainly all the cement capacity will get used up. Maybe not in a year, maybe in 2 years' time. And so then we will see the cement companies get fair valuation in relation to their replacement cost, and new capacity addition can take place. We are, don't forget, at less than a quarter of Chinese production, for instance. And so we are on a good wicket in terms of the cement industry as a whole. We need cement to have the infrastructure in place for our growth to take place.
Pradip, I'm getting slightly worried because no one is talking about bad news, no one is talking about red flags, everyone is simply talking about good things. No one seems to be, taking notice of where inflation is headed, what will happen to earnings. Everyone is hoping, or hopeful rather, that Modi will come back, things will improve and macro will turn around. Don't you think some degree of complacency has kicked in?
Oh yes, you're absolutely right. There is over enthusiasm in the market. We are discounting, for instance, this fear that there might be a poor monsoon this year, and that monsoon effect is quite significant in terms of inflation and consequential interest rates and fiscal control, as well as in terms of its effect in terms of just the water shortage in production and so on and so forth. Plus, we are discounting the legacy of the fiscal situation. Now, there is hope, of course, that a strong leader can come in and create investment demand, create the climate for investment to take place and so on. But there is definitely a time period before which the results can come. And so their market has run a little bit ahead of its time. The greatest disappointment will be, of course, if a strong mandate is not given to any coalition or single party, in which case there will be a big disappointment if there is a fractious coalition. One opportunity there is over here in the country. We have the 14th Finance Commission sitting in deliberations on the devolution of taxes and grants in aid. This Finance Commission has a golden opportunity to help bring about greater fiscal discipline in state and central governments through its reward and incentive and disincentive system of allocating taxes. So, for instance, why should agricultural income not be taxed? Now, there's an argument of fairness and justice, which is part of the Constitution's desire that we secure economic and justice for all citizens. And the Finance Commission, if we were to, for instance, force states to levy an income tax or center to levy an income tax on agricultural income, we would see a dramatic improvement, for instance, in the fiscal situation, or cutting down on profligate subsidies or subsidies which are not intended for instance, the Millennium Development Goals. Now, if those fiscal subsidies are reined in, if we can control the fiscal deficit, the macroeconomic environment improves dramatically. And as I said, if then the Reserve Bank and the Finance Ministry work together, we have a golden opportunity to go back to a high growth path.